Note to learner: this video provides content that will be hosted on the Ginnie Mae LMS in the near future. In this video, you will not be able to interact with screen content to include selecting pop-ups, launching resource hyperlinks, and answering knowledge check questions. Nonetheless, you will be presented with all of the content presented in the interactive e-learning training. Though the audio narration may request that you select items or buttons on the screen, please pause the video to read the content and then select play to continue with the video. When the video advances to a knowledge check, please pause the video and try to answer the question in your head. Select play to see the correct answer or answers to the question.
Welcome to the Ginnie Mae Foundation's overview. The purpose of this training is to present the Government National Mortgage Association, Ginnie Mae, Mission, History, Statutory and Regulatory Authority, and the basics of the Mortgage-Backed Securities, MBS, programs. Select Objectives to learn what you will be able to do by the end of this module. Select Next to continue when you are ready. Ginnie Mae's mission is to bring global capital into the housing finance market, a system that runs through the heart of our nation's economy, while minimizing risk to the taxpayer. In support of this mission, Ginnie Mae has worked to make affordable housing a reality for millions of Americans by providing liquidity and stability. It serves as the principal financing arm for government loans and ensures mortgage lenders have the necessary funds to provide loans to consumers. Ginnie Mae is the only federal agency tasked with the administration and oversight of an explicit, paid-for, full faith and credit guarantee on mortgage-backed securities, MBS. Even in difficult times, an investment in Ginnie Mae MBS has proven to be one of the safest an investor can make, as evidenced by the demand for these securities from investors worldwide. Select Next to continue. Although created and established in 1968, the genesis of Ginnie Mae can be traced back to the Great Depression, when historically high unemployment rates led to an unprecedented wave of loan defaults. When the surge in home foreclosures further depressed housing values and the nation's overall economy, Ginnie Mae evolved from the National Housing Act of 1934, the Federal National Mortgage Association, or Fannie Mae, in 1938, based on the amended National Housing Act, chartering of Fannie Mae, and the Housing and Urban Development Act of 1968. The Housing and Urban Development Act split Fannie Mae into two separate corporations. Fannie Mae would purchase conventional, non-U.S. government-insured or government-guaranteed mortgages. The second corporation is the Government National Mortgage Association, or Ginnie Mae, that has the full faith and credit guarantee of the U.S. government. Ginnie Mae provides liquidity to lenders while broadening the market for mortgage loan investment. Select Next to continue. Let's examine the obstacles to new loans that resulted in the first MBS. Historically, mortgage rates and availability of funds vary by region. Additionally, it was nearly impossible to sell individual mortgages on the secondary market. This meant that banks customarily had to retain mortgages. These obstacles significantly limited the number of new loans that could be originated. In 1970, Ginnie Mae developed the very first MBS, which allowed for many loans to be pooled and used as collateral in a security that could be sold in the secondary market. These loans are insured or guaranteed by the U.S. Department of Housing and Urban Development, HUD, Federal Housing Administration, FHA, and its Office of Public and Indian Housing, PIH, as well as the U.S. Department of Veterans Affairs, VA, Home Loan Program for Veterans, and the U.S. Department of Agriculture's, USDA, Rural Development Loan Programs. Ginnie Mae's position within HUD is as a corporate instrumentality whose role is to support affordable housing. Select Next to continue. Now, check your understanding. Now check your understanding. Let's look at the difference between statutes and regulations. Statutes are also called acts. Statutes provide laws that are a system of rules passed by either the U.S. Congress or state legislatures and may enforce imposition of penalties. Regulations, on the other hand, are standards and rules adopted by administrative agencies that govern how laws will be enforced. Let's examine the statutes and regulations governing Ginnie Mae. Select Next to continue. In 1968, Ginnie Mae's statutory authority was derived from Title III of the National Housing Act, 12 U.S.C. 1716, which established it as a government corporation, granting the authority to issue securities with the guarantee of the full faith and credit of the U.S. government backing, collect fees, and set the ceiling on the guarantee fee. Ginnie Mae is granted the authority to exempt its securities from Securities and Exchange Commission (SEC) registration requirements. It also has the authority to implement the multi-class program, extinguish issuer interests pursuant to a default, and impose civil money penalties. Select Next to continue. As a government corporation, Ginnie Mae and its programs are governed by a set of regulations published in 1995 in Title 24 of the Code of Federal Regulations, CFR, Parts 300 through 400. These regulations grant Ginnie Mae the right to appoint a power of attorney, make exceptions to its rules and requirements, and audit the books or records of any issuer, mortgage servicer, or trustee, etc. The regulations define the characteristics of Ginnie Mae securities, establish parameters for the Mortgage-Backed Securities (MBS) programs. They also establish general program participant requirements and set pool parameters. Finally, the regulations direct program participants to the terms of the MBS Guide and the Guarantee Agreement. Select Next to continue. Now, try this knowledge check. By securitizing loans into MBS, Ginnie Mae lowers the cost of mortgage funding and passes along the savings to support housing and home ownership in American communities. Take a moment to explore in a nutshell what Ginnie Mae does, why it is important, and how it accomplishes its goal. Select what, why, and how to learn more. When you are finished, select Next to continue. Ginnie Mae facilitates the creation of mortgage securities by issuers who create pools of loans that are converted to securities and purchased by investors the world over. Ginnie Mae's core functions include to establish requirements for the MBS programs, approve, support, and monitor issuers and servicers, and maintain the infrastructure through which MBS are issued. It also has the essential role to remit principal and interest, P&I, to investors and to support multi-class securities formed from MBS. Ginnie Mae also manages the assets of defaulted issuers that were former Ginnie Mae program participants. Select Next to continue. Now, try this knowledge check. Mortgage-Backed Securities, MBS, are bonds secured by real estate loans, such as home mortgage loans or other residential property loans. Through securitization, the mortgage lender can take the pooled loans and issue an MBS with a value of, for example, $10 million. Mortgage lenders who are approved to participate in the Ginnie Mae program as an issuer Create an MBS by using a pool of loans, usually with similar characteristics, as collateral. This means that the MBS created from these loans will provide payments to an investor that are derived from the payments made by borrowers of the underlying mortgages, MBS collateral. The investor would receive monthly payments of P&I, called pass-through payments, for the life of the security. Note that the payments made to the investor may not always be directly dependent on the mortgage payments made by the borrower. Ginnie Mae facilitates the creation of mortgage securities by a varied network of mortgage lender services, but does not itself buy or sell loans or issue MBS. This approach effectively minimizes risk to the government and taxpayers. Select Example to learn more. Select Next to continue when you are ready. A Ginnie Mae MBS is an MBS that is assembled and issued by issuers in conformance with Ginnie Mae guidelines. It carries the Ginnie Mae Guarantee that is backed only by mortgage loans that are guaranteed or insured by a federal agency, for example, the Federal Housing Administration, FHA, Veterans Affairs, Office of Public and Indian Housing, PIH, or U.S. Department of Agriculture, USDA. Ginnie Mae MBS are modified pass-through securities. In a pass-through MBS, the issuer collects monthly payments from a pool of mortgages and then passes on a proportionate share of the collected principal and interest to bondholders. Modified pass-through certificates offer investors income through a pool of underlying assets, typically mortgages. Issuers are responsible for the servicing of their loan collateral and are equally responsible to pass through investor payments monthly, P&I, whether or not the borrower has made their monthly payment obligation. That's the link to the full faith and credit clause that only Ginnie Mae offers. So how is the Ginnie Mae MBS different from other industry participants? Unlike insuring agencies, Ginnie Mae does not insure lenders against borrower credit risk, nor does it set credit or underwriting standards. Unlike government-sponsored enterprises, GSEs, Ginnie Mae does not purchase loans or MBS, nor issue or sell MBS. Finally, unlike lenders and servicers, Ginnie Mae does not originate loans or provide financing for other lenders. It also does not service loans, with the exception of seized portfolios. Ginnie Mae's MBS market share has skyrocketed from a low of 4% in 2005 to a peak of 31% in recent years, as measured by the amount of outstanding securities. Select Next to continue. The Ginnie Mae Guarantee states that an issuer can obtain from Ginnie Mae, for a specific MBS, a guarantee that the investor will receive the timely payments of all P&I due on the security, regardless of whether the borrower, lender, or servicer are able to make monthly payments. The guarantee ensures the following benefits. It guarantees the full faith and credit backing of the United States, which in turn attracts domestic and global capital to the nation's housing finance markets. The guarantee lowers the costs of mortgage funding and passes along the savings to support housing and home ownership in American communities. It also benefits mortgage lenders by allowing them to obtain a better price for their mortgage loans in the secondary mortgage market. The guarantee ensures proceeds can be used by lenders to make new mortgage loans available. Without this liquidity, lenders would be forced to keep loans in their own portfolio, greatly reducing the number of new loans they could make. Select Next to continue. Now check your understanding. The goal of this training module was to provide you with a fundamental understanding of Ginnie Mae's mission, history, statutory and regulatory authority, and the basics of the MBS programs. You learn that Ginnie Mae, through its MBS programs, guarantees securities that are backed by pools of mortgages and issued by mortgage lenders, issuers, approved by Ginnie Mae. Security holders receive a pass-through of the principal and interest payments on a pool of mortgages, less amounts required to cover servicing costs, and Ginnie Mae guarantee fees. You learn that the Ginnie Mae Guarantee ensures that the security holder receives the timely payment of scheduled monthly principal and any unscheduled recoveries of principal on the underlying mortgages, plus interest at the rate provided for in the securities. Select Objectives for a review of what you should now be able to do. This concludes the training. You may use the Exit button to leave this presentation at this time.